Today, Bitcoin bounces back from yesterday's dip. Ryan Salem shares a job update as he prepares to serve his 7.5-year prison sentence. And Circle CEO Jeremy Allaire explains how the stablecoin issuer is preparing for lower interest rates. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Bitcoin is bouncing back from yesterday's losses as we close out the week. By noon Eastern, the cryptocurrency reclaimed the $62,000 level. Ether climbed 1.7% to 24.43. And then Solana is among the biggest winners today, rising more than 4% since Thursday. If you look at the past week, the crypto market has been pretty quiet. Bitcoin dipped just slightly, while Ether and Solana both inched up by less than 1%. All three lagged the S&P, which has climbed more than 1% since last Friday. Okay, let's talk about the top stories. Former FTX exec Ryan Salem is expected to report to prison today for his 7.5-year prison sentence, and he wanted to make sure that everyone knew about it. The former top lieutenant at the collapsed exchange updated his job title on LinkedIn to FCI Cumberland inmate. After the update went viral, Salem posted on X saying that he learned that people still used LinkedIn. Now Salem is headed to the medium security facility in Maryland after he pleaded guilty in 2023 to conspiracy to make fraudulent campaign donations, conspiracy to defraud the Federal Election Commission, and conspiracy to operate an unlicensed money transmitter. Now, that plea deal was put in peril after Salem claimed that prosecutors had lied to him when they offered to drop a probe into his longtime partner Michelle Bond. Now, the judge overseeing Salem's case threatened sanctions against the former executive, repeatedly claiming that he had induced the judge to accept the guilty plea by failing to disclose the promises made by prosecutors. Next, the SEC is suing crypto market maker Cumberland DRW. The agency charged the company yesterday, alleging that it's been operating as an unregistered crypto securities dealer since 2018. The SEC says Cumberland offered and sold more than $2 billion of crypto assets as securities. This is a continuation of the many enforcement actions against the industry by the regulator. The agency's acting chief of the Crypto Assets and Cyber Unit, Jorge Tenrero, said that despite frequent protestations by the industry that sales of crypto assets are all akin to sales of commodities, the agency alleges that Cumberland treated its crypto offerings as securities investments without providing investors and the market important protections afforded by registration. Now, Cumberland put out a statement yesterday saying that it's been the target of the SEC's enforcement-first approach, despite bipartisan pushback on that style of regulating. The company says that it's been engaging with the agency for 5 years and that the legal complaint is the first time the SEC specified the transactions that it took issue with. Cumberland says it's not changing its business operations as it believes that it is compliant with the law. All right, let's pivot to stablecoin issuer Circle for our main story. Crypto World's Tanea McKeel spoke to its CEO Jeremy Allaire about the firm's strategy amid the changing interest rate environment. Many stablecoin issuers get their revenue from interest paid on their reserves, so as rates start to fall, Tanea asked him about the firm's strategy. She also asked him to give an update on the company's plans to go public.
Thank you so much for joining us on Crypto World today. The Fed has begun cutting interest rates, and I do want to talk a little bit about what that means for stablecoins, the stablecoin market, and for stablecoin issuers like Circle. So for many, just to be very specific, let's talk for this conversation about US dollar-backed stablecoins. For many, the core business model is, making the product free and retaining the interest that is being earned from the treasuries that are being purchased. So, the big question at the top is, what do these upcoming rate cuts from the Fed mean for Circle and for Circle's business?
Yeah, so I think first, maybe just for grounding, when we think about our core product and the core value that we're bringing to the market, we think about this as sort of an internet scale network utility. It's a platform utility that's on the public internet. The protocols that we operate provides a stablecoin network, and that's open and accessible to end users. It's open and accessible to developers, to financial institutions. And so we've built this network, and that network has thousands of products and services that are integrated with it. It's available all around the world. It's through wallets and exchanges and payments products. yesterday, Stripe rolled out USDC payment acceptance to, 1 million US merchants that can now use that as a payment method. So that's part of this stablecoin network is all of this. And that network, that really is the core of our product. And obviously the digital dollar that we issue, USDC, is an asset. It's an electronic money token that can be used on that network, and it's used a lot, right? Over $16 trillion of transactions on this blockchain, on the blockchain, on our network over time. And so there's the network and the platform and the utility that's there, and then there's the activity on there, and then there's obviously the kind of digital asset. In this case, it's an electronic money token in the US, and it's an electronic money token in Europe. The stablecoin, as it were, sort of floats and is used on that. And there's always supply and demand for how much of those digital dollars are needed on the network at any given time. If there's demand for payment activity here or trading activity there, or people who want to store it and hold it as a digital dollar, there's all these different kinds of demand drivers for the adoption on our platform and on our network. And so specifically, I'm coming to your question. Specifically, the question is really, what does the price of money do to kind of the demand and supply of a digital currency like USDC? And I think we don't actually know entirely. What we do know is that the purpose of increasing interest rates or lowering interest rates, the goal of the Federal Reserve, that's the tool that they use to either slow down the velocity of money in the economy or increase the velocity of money in the economy, or in sort of Fed speak, to take a neutral position with respect to the velocity of money in the economy. And so if you look at the broader capital markets, not just say something like a stablecoin itself, but broader capital markets, there's obviously this sort of general view that lower interest rates are better for markets because the cost of capital becomes lower, and the opportunity cost of capital, shifts, right, from it being sort of reasonable to kind of keep cash on the sidelines. Whereas when you're, say, at a 3% interest rate, it's not really so smart to do that because you obviously want to get a better return on your capital. And so that increases velocity of money in the economy. That increases the amount of investment activity in all forms of assets. And it actually increases the amount of real economic activity. The goal of lowering interest rates is to ensure that there continues to be robust economic activity. And so when I think about this, and when we think about this, what we've been saying, and I've been saying for some time, lower interest rates would be a very good thing for Circle's business, because lower interest rates means that more capital is going to get put to work, more investment capital, that the velocity of money will increase, and the demand for a technology utility with sort of the highest velocity of money in the world, which is stablecoin money, will grow.
Yeah, I was actually surprised to hear you say that, because I think the conversation kind of assumes that issuers of stablecoins are, stuck in this sort of box where rates determine their revenue. If you can hold, billions of dollars and make 5% on it, that's obviously more attractive than, holding the same amount and only making 1 to 2% on it. And you did sort of address this. How long is your outlook, I guess? Like, to what extent do you feel like you're in that box, at least in the short to medium term? Or are you not worried about it at all?
Well, I mean, I think, in our business, and I think also in many other, say, financial markets businesses, like, the interest rate environment has a big impact on the, say, volume and volatility and what happens in traditional markets, not crypto. It has a really big impact on sort of lending velocity. How much new business can a bank generate with a high interest rates that goes down, right? There's not as many mortgages, there's not as many houses built, there's not as many small business loans, personal credit gets more expensive, the rates go up, right? So you get a dampening from that, which is the tightening. That's what the Fed's trying to do. But as rates come down, well, that's good for business, right? If I'm a financial market participant, it means, there's probably going to be more trading fees, there's going to be more activity, there's going to be more borrowing, there's going to be more risk taking. If that means that rates are lower, it means that entrepreneur who's thinking about opening their next store or hiring their next employee feels more comfortable because they can get a more reasonable loan from their bank for that expansion activity. For the homeowner, they say, wow, maybe now is the time to buy the house, build the house, refinance the house, et cetera. So it cascades, and it cascades in all these places. And so banks themselves will often say, and I don't know that I can quote Jamie Dimon here, but I'm pretty sure he's probably said things like the high interest rates are not good for business, even though they're capturing, they have all these deposits and they're capturing this sort of interest rate environment, and they're not passing it on to all their customers and the like. Their core business is putting money to work. And so if there's less putting money to work, that's where they really get their return on capital, right? So I think as a stablecoin issuer, we have to ground ourselves very similarly.
Well, you're here, and I have to ask, the crypto community has talked for so long about Circle going public or being the next likely company to go public in crypto. Is there anything you would like to share today regarding IPO plans?
Yeah, I mean, I can't comment specifically on any kind of regulatory reviews that we have going on as a company. But what I can say is that, becoming a US listed global publicly traded company, we believe is critical to our future. We've built this company with a reputation for being trusted, transparent, and compliant. That's a critical part of who we are and why so many people work with Circle and build on USDC and the like. And we believe that if we can be a US listed, publicly traded company, we're increasing that trust and transparency. We're actually providing even more transparency into our company and our operations, even more compliance with rigorous stock exchange and SEC rules, with more accountability from a governance perspective, an ethics perspective. All of these things are the hallmarks of building a more trusted institution. And so from our perspective, it's part of kind of expanding on attributes that are already strong for Circle, but we think become even stronger as a publicly listed company. So we're committed to that path and do hope to realize that.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.